Hi, folks. This is Mike Zlatnik, Big Mike, and today we're going to talk about an exciting passive income deal called Lake Castleton Apartments in Indianapolis, Indiana. So this specific presentation is going to talk about Class A debt units that pay investors total of 15% annual interest, 10 paid current quarterly, and then 5% is deferred until the project reaches a refi or a sale point. This project had also equity units available, but all of them filled, and the property obviously already closed and funded. So we just starting to raise the capital for the Class A debt units for investors with interest in passive income, 10% current and 5% back end. So let me run through the slides as quickly as I can. I believe it's a phenomenal deal. We love the asset, we love the project, but let me take you through the slides. So wonderful disclaimer, this presentation is for informational purposes only. This is not a solicitation of any kind, nor are we offering any kind of advice. If you're interested in the deal, please reach out and request the private placement memorandum PPM to accredited investors only. Consult with your attorney and CPA professional before making any investment decisions. Thank you kindly. So just a couple of words about the project. So we partnered on this property with Pepper Pike. Paul Keebler is the principal. He's the president and chairman of the board. We've done many deals with Paul and Pepper Pike. It's a phenomenal organization. They have massive footprint in Indianapolis and Midwest. They know how to do these type of apartments, value as strategy. But before I do that, let me just talk a little bit about this specific project. The property is called Lake Castleton Apartments. It's 1,261 doors, very large multifamily complex in Northeast Indianapolis, phenomenal area. As you can see here, it's a substantial investment. Purchase price $171 million. There is a value add component, renovations, improvements of the units, all in approximately $190 million, of which $50 million, little over $50 million is equity, and the rest was first lien mortgage from Voya. And the property already closed, funded, and renovations already started. So we basically just bring it in these Class A debt units for folks who want to participate in the deal as an income passive investment for their portfolio. So we'll talk more about it in just a minute. Just a couple of words about the sponsor. So Pepper Pike has been around since 2002. They have done over 30,000 units, over $2 billion worth of multifamily assets. 63 properties have gone through value add life cycle, mostly in Midwest. As you can see, here's the map of projects that they've done. And they've got many assets in Indianapolis. It's their strongest footprint market. So here's the picture. They have 9 assets in Indianapolis. They have a massive warehouse. I visited this property and other properties. I've seen the warehouse. I've seen the operation, the team. These folks, an institutional class type of operator who can do these type of projects. They have phenomenal ability to execute value add work. They buy materials directly from factory in China. They have a ton of expertise and able to execute. So this property, again, Lake Castleton, was acquired in March 2020, and it has started its value add life cycle. Just basic investment thesis. This property has had institutional ownership, and they've invested a good amount of money already in this project. So renovations are fairly light for this type of an asset. When I went to visit the property, the first thing I observed, all the roofs are done and in phenomenal shape. And most of the investment that's going to take place on this property is going to be internal renovations, which immediately go to the top line and bottom line through the virtual ability to increase rents. So these properties will have some common area and other improvements, but a lot of the dollars renovation budget is going to go straight into the investments that will generate higher rents. And as you can see, 725 units, which is a good portion of them have been already renovated. and they'll get an additional $5,000 a unit. And then unrenovated units will get about $20,000 full renovation. And all of it will go to fresh lease up at much higher rents. Northeastern Indianapolis, it's a great area. We've got multiple assets in Northeast Indianapolis. That area is as good as it gets in Indianapolis. We love the rent growth. We love the surrounding areas. This particular asset is in a phenomenal spot. So if anything that matters in real estate, that is location. So location, location, location. This property is at a phenomenal location. And we'll cover what it's next to in just a couple of slides. So here's an example of a classic view and what post-renovated units look like. As you can see, great finishes, stainless steel appliances, completely modern open view. I've seen these apartments myself. They just look phenomenal. It's a day and night difference. And the demand for renovated product is very high because Paul does phenomenal work. He uses high quality finishes, high quality materials. And as a result, these units are very attractive. Just a couple of pictures of the property. It's got a great playground. It's got a clubhouse, actually a very nice clubhouse. It's got a nice pool. It's literally sitting on man-made lake, Lake Castleton, I guess that's the name of the project. There's a dog park, tennis courts, grilling area, just a nice, I would call it A- type of an asset, garden style apartments in Northeast Indianapolis. This is what the property will look like when they apply new finishes to these buildings. Instead of a brick look, they're going to look like a little bit of white color instead of classic brown. And so that's the future look. And then let's talk about the rent growth. Indianapolis has seen phenomenal rent growth, especially in the last couple of years. And it's been a great steady eddy market with rents growing up and up and up over the years. Not a cyclical market. So we feel strongly about sponsors' ability to push the rents up as the natural inflation is strong. On top of that, the value add work increases the rent substantially as a result of those renovations in the internals of the apartments. This property, Lake Castleton, is a phenomenal property. It's actually pretty close to another property called Riverbend, which we are investors in as well. We're partners with Paul. We love both assets. They're in a phenomenal area. There's a great community health network literally right next to the property. Basically a hospital, great location, and makes this property very attractive for healthcare workers, as well as just surrounding supporting businesses for folks who want to live near their work or great shopping. So you can see there's a Castleton Square. It's a great mall, literally within minutes from the property. And then there's a Keystone at the crossings, another shopping area, very, very close. So this property is basically near Class A office space, proximity to great interchanges, basically highway, as well as great dining, shopping, and so on. Here are the pictures of the community health North Campus, as well as the community health center right next to the property. Just a great location to be in, next to phenomenal healthcare hospitals. Keystones at crossings, again, 10 minutes, 4.7 miles away from the property, great location. They got high-end retailers, really desirable area to be in. Castleton Square is another, it's basically Indiana's top shopping mall, over 1,300,000 square feet in essentially 6 minutes, 3.7 miles from the property. Just phenomenal location for Lake Castleton apartments. Here's a little bit of the details on the pre-renovation to post-renovation rent. The operator, in this case, Paul Keebler and Pepper Pike, have a phenomenal value add strategy. They execute really well. They push the rents up, increasing the value of the investment, creating safety for investors, as well as great returns. Once again, the sponsor has a massive footprint in Indy. They have economy of scale, all the supplies, strong rehab and management operation, and strong track record and an ability to hit the projections or do better. We love working with the team and continue investing. This is an institutional class operation and just phenomenal operator and a partner to partner with. So we are talking about this offering, Class A debt units, and investors who participate in this class will receive 10% annually, paid quarterly. And it works really well for IRA. This is interest payments, and they basically have no UBIT risk or UBIT implication at all. So it's 10% paid as you go, distributed quarterly, 2.5% every quarter, as well as 5% additional per year on a back end at a time of the refi or a sale of the property, with total return of 15% per year. Here's another quick look at the project. So the target raise of Class A debt units is $4.5 million, and they're backed by an additional $1.5 million Class A equity units. So these units are pledged essentially as collateral to make sure that that debt is paid to the Class A debt units. The way the deal got funded is the Class A equity units, they brought in $6 million and funded the deal. At this point, the Class A equity investors looking to recover $4.5 million, and that capital will be raised in the form of Class A debt units, which will repay Class A equity units $4.5 million. And the Class A equity units will have $1.5 million left, and they'll be responsible to bring in additional capital to the deal to service the debt on this $4.5 million Class A units. And the investment in the Class A equity units has the best economics in the deal. That pledge is basically secured by a top class equity in this investment. So the folks that participate in the Class A debt units basically participate in this passive income investments, receiving 10% per year and 5% on the back end, will be secured by that additional $1.5 million and a great position in the deal. So total return, as I mentioned, will be 15% per year, paid as 10% current interest, paid quarterly, and 5% on the back end upon a refinancing or sale of the deal. It's perfect for self-directed IRA investors, minimum investment $50,000. Distributions will be quarterly as 1099 int, that's the tax form, and projected term is 5 years. Although the deal may take shorter or longer, the current projection, it'll be sold or refinanced in 5 years, and investors repaid in full. If you're interested in the deal, please reach out to Alina, our head of investor relations, via email. Just email at invest@tempofunding.com, and she'll get back to you as quickly as possible with the private placement memorandum, and happy to chat with you about any questions. Appreciate your time and attention. Thank you very much. Looking forward to hear back from you about this investment opportunity.